That's solid. So today's gonna be a little bit tricky, guys, and for a couple of reasons. We're getting a big gap in the market. When you get a big gap in the market, man, it's like it takes all the range out of it. Imagine going to Thanksgiving dinner with a full stomach. It just don't work right. It's like you just want to eat, but you can't. You can't eat. Next thing you know, right? You're just on the side of the road at a gas station with your mom eating taquitos because the Thanksgiving fun was taken out. And that's what's happening right now. We're just gapping up right into resistance. We faded off at this level a few times. Now, granted, this was a first tap, second tap. Usually the second test of a resistance level doesn't hold. So, if you're overbought running into resistance, it's a second test. It's usually not going to hold. We are coming in on the third test, but there are still some things to worry about. Number one, we faded off at the upper Bollinger Band the other day, and we had a rest day, which is actually positive. An inside day, which is when the candle is inside the previous day, is actually a positive. That's a net positive on the market. You want to let this Bollinger Band kind of loosen up. But we still are overbought. We're running at 86 stochastics. We're under that Bollinger Band. We're gapping up, and so this leads to the perfect conditions of kind of having a choppy day. When you think about the market and some days they're just it's less tradable, right? Less tradable than others. And that's what's going down right now. That's what's going down right now. So we got to be just a little bit careful today on what we're doing and managing around all of this fun stuff. This 195 is going to be like a rock. Now, the good thing is, we do get a lot of the trade war stuff out of the way. Even though it's not out of the way, it's out of the way at least for the next couple of weeks till, the Trumpster changes his mind. And then, things will go back on. So, in absence of news, the market tends to drift higher. Always remember that no matter where you are in the markets, in absence of news, markets tend to drift higher throughout the history of the market in just normal time. So if we take away that overhang, then there's a chance we just drift up and kind of, bust this thing loose. But we do have a couple red flags here, and that number one, we got a gap today, which takes a little bit of the fun out of it. And then, you're running right into resistance, right? But you are at multiple tests of resistance, so that's a positive. So you got a couple good things, couple not so good things. So it's a double negative, which makes it a positive, which is good, right? Well, we're going to roll with that. Now, because it's earnings season, you don't have to necessarily focus so much on just the pure market. There'll be some stocks with earnings out, but we're not really in the meat of earnings season. Today, Alcoa announced earnings. That's usually the kickstart of earnings. Why? Because of the ticker, AA. So we're starting it up. We'll be knee deep into it in a few days, but we're starting to get a small trickle into them. Couple things that are in flavor today. The stuff that people will be talking about is what? Cult stocks typically generate the most buzz on earnings day. So cult stocks, you have two over here that are rolling. You got CRON, right? So the millennial cult stock traders like CRON because it's cheap, they smoke weed, and they don't get laid. So CRON is the hot one for the under 32 crowd. The over 32.5 crowd, their cult stock's going to be the Netflix because they're more the Netflix and chill, the Netflix and the masturbation, the Netflix wine masturbation combo is all what the 32 to the, I would say, 44 age bracket is into. That's their cult stock. Now, for those that are above 55 to I would say 71, they're going to be more interested in IBM because Big Blue was the cult stock from World War I and World War II and possibly the Korean War. So now you've got three cult stocks going. You've got IBM for the septuagenarians and sextuagenarians, pun intended. Then you've got Netflix for the masturbators and anticipators. And then you've got CRON for the kids that don't even have the energy to do the masturbations or get laid. They're living in their parents' basement, just watching YouTube videos. They don't even watch Netflix because they don't have any money, and that $9.99 thing for Netflix is too expensive. So they're going to be all up in CRON, and they're going to be trading on their Robin Hoods. And the guy got like 6 shares of CRON, bro. And the other guy's like, yeah, man, me too. Let's play World of Warcraft. And they're like, yeah, sick. And that's what's going to go out. So these are the plays for today. So let's talk about CRON. CRON is busting up on earnings. There's a couple things that are happening with CRON too. You're going to have high short interest on CRON today. You get 24% of the float, which is short. 40 million shares float, which is a fairly decent amount. So when you're thinking about like how many shares are short, look at the short interest ratio. That's days to cover. Days to cover is important. When you think about days to cover, it's how many days of its normal volume do you need to cover all the shorts, right? So stock does 5 million shares a day in volume. It's got 50 million shares short. Next thing you know, that's 10 days to cover. So like all the people would have to be covering for 10 straight days essentially if they were doing average volume to get that thing going. So CRON may have a chance. But one reason I personally don't think it's like the hottest one, the location on its daily chart is a little bit weird. Now, typically like earnings breakouts, if you have accelerated earnings, if you have high short interest and things like that, and you have a big base, those can be the most powerful earnings breakouts around, especially if they're on like smaller type of stocks. But this one's in a weird space. Ideally, like if it had a base like this, like where it was just going sideways, like in a tight range, and then you had this kind of move, I would be really up in its grill. But because like it's just in a downtrend and now it's popping up, it could go either way. The other thing that you're noticing is, you know, at one point it was up like 30-40% in pre-market or post-market, and it faded off a big chunk of its gain. So now it's hanging out here, but is this a lower high? It's 50-50. You're really going to have to let the trend set on this one before you know whether it's any good. Watch this 50 SMA here. It's at 1080. If you start to build out a pattern and you're over 1080, you're good to go, all right? You know, you're good to go for maybe a run to 12. Don't marry this thing. It's in a downtrend. It's a turd. And frankly, pot makes people a little bit lazy, a little bit chubby, and, you know, potheads are kind of like elitists, aren't they? Like, you never see like a guy that drinks Budweiser being like, oh my God, Budweiser's so sick. It cures cancer and it's amazing, right? But like you get like, you know, the pot guys really like, it's like, oh man, I've got erectile dysfunction. Oh dude, rub some CBD. Have your mom rub some CBD on it, bro. Like it's going to be fantastic. You're going to get the boners back, right? And it's like, oh man, like my foot hurts. Oh, just rub some CBD on it. Oh man, my girlfriend had sex with Pablo the pool boy. Oh, bro, you gotta take some CBD. It's gonna be amazing. Next thing you know, CBD cures everything. Pot is amazing. The Budweiser guys don't do that, right? The Budweiser guys are just hanging out. They're like, man, I'm just at a country music concert, watching football, and resting their beer can on their belly. I mean, that's an admirable thing. I don't know, but I'm old school. Who knows? So, CRON, don't worry about this one too much. We've got other plays. But it's a cult stock, so we got to just kind of keep it in watch. TXT, this one reported earnings. It looks like they've missed. My worry on this one is normally TXT, I've seen them report earnings a few times. It usually moves around a little bit more in the pre-market. Like, I don't know what's going on and whether this thing's just halted or whatever. But it's been at 4,674 volume for quite a bit of time since I friggin' woke up. So if the liquidity comes in and it breaks under 48, we add this in. It's got the ability to move. It's about a 200 million share float, which is the sweet spot for shorts. IBM breaking under the 50, the 200. You've got yourself some nice, dude, you got yourself some nice range on this already. It's a thicker stock. It's a billion share float, right? It's a $100 billion company. So once the market opens, it may start to flatten out a little bit. When you trade a higher float stock, so remember the patterns. For those of you guys that are not familiar with the patterns, we trade ORBs and quick pullback buys at the open. Check the videos on the YouTube. If you don't know what those are, just email me or whatever. I'll get them to you. But what you want to do with IBM is there's a chance it's probably not going to ORB in the traditional sense because it's thick. It's going to have algos just up in its grill all over it. That's going to be a little bit more tricky. So watch this one. Once it spikes down at the open, if it starts to trickle back a little bit, right, it's going to give us a little bit more breathing room because it's probably used up a good chunk of its range already. I can't imagine, how much range could IBM really have in a day? $10 seems like it was like the sweet spot. Is it going to have any more than that? I don't know. So it better to short this one on a pop. United Pacific was busting down on earnings. It looked like it was hanging out pretty well, but it's already started to reverse. I don't like shorting these type of plays where they reverse already in pre-market, because what happens is when you get the ORB pattern, so say you open and it's down here and you get 1 candle, 2 candle, 3 candles over here for the ORB, well, what typically happens is you're going to run into all this resistance over here, like a hidden resistance. Now, I don't keep pre-market data on my charts because it kind of messes up with the EMAs and it just makes them look all sloppy as get up. So you got to make a mental note of the levels, right? Leave a little note in your TC 2000, right? And I'll put in okay, 157 pre-market support, or draw a level. 2 ways to go about it, or use a sticky note. One thing you guys got to get really organized this time of year is in the heat of battle, when you're trading and you've got all these charts and all this stuff and you got your tweeters and stuff just pinging around, it's very hard to stay organized and you get really zoomed in. You start to watch minute by minute your patterns and you're like, okay, this is a dip, this is a washout, or whatever the new stupid terms are that traders are using that don't make any sense, right? These kind of terms make a pattern or make a setup. But you start getting so zoomed in on, right, what that is happening in the last 5, 6, 7 minutes that you're really forgetting the bigger picture of things. What you really need to do if you want to trade properly with an edge, an enduring edge, right, you got to know all your levels on your daily chart and on multiple time frames. So if you're thinking, okay, 157 pre-market support, then add in where the levels are on the daily, so that when you're actually trading, you may not have your daily chart up. You could say okay, 160 is 50 SMA, 158 is this, so on and so forth. Leave yourself a little plan, and then you can come in and say, okay, big float, only short on pops to moving averages, right? Whatever you want to do. But leave yourself a little bit of a note, somewhere, so that you can just stay organized. Because the biggest mistake that new traders do is they go on, they turn their trusty trade ideas on, and they're like, okay, I'm ready to trade. And it doesn't really work like that. To build out a pattern, say you want to get into an entry, you've got to not just know what's happening on that minute-by-minute basis in terms of the specific pattern you're looking at, but you've also got to look and say what's happening in the bigger picture. What are the levels on different time frames? How's it looking like on an hourly chart? Where are the booby traps? Pun intended, right? Where are the booby traps on this thing to get you going? That's where you start to build out an edge on these things. So don't think okay, I got a dip and it's starting to go. That's where that's where it goes. Boom, 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 boom. So be mindful. You can already see this thing is creeping up. So watch that 11 spot. We go, Chris, what's going on? How's your bro doing? Now let's talk about the general watch list. You got this Rita, right? Rita, Rita, don't you want to Rita? Now this thing has got some big heat on this thing. You cannot hit this thing on strength. But watch this one. If you start to get some big dips on this bad boy intraday, you can hit this thing on support. On a day 3 of a move after a gap, you can't really chase strength because you'll get shaken out a lot. But what you'll see with this Rita is it'll pop into resistance and it'll drop like $7-8 and then it starts to ramp back. So if you start to see like any kind of big dip down to support, big move down to support, that's when you can start looking at this thing for a potential rebound. I'll show you the type of pattern you want to look at for this type of thing. When you're on a multi-day run, so stock is up 4, 5, 6 days in a row. When you're on a multi-day run, you don't want to hit something. You don't want to hit something like right on. You don't want to chase it higher, because if say like Roku, right? This is up multiple days in a row. It goes from 100, right? Was the low to 135. So like say you do this, right? This is a classic pattern that, everybody teaches in some type of class, right? So, you could call this a flat top breakout, flag breakout, A, B, C, D pattern, A, B mama pattern, yo mama pattern, whatever you want to do, right? But if it's extended, then you can buy this type of pattern. It's just going to go up and pull back, and it's not going to work. When you get extended, you're on day 3, day 4, day 5 of a move, okay? When you're on day 3, day 4, day 5 move, what you need to do is you got to let them flush out, and then when they start to rebound and like start to even out, once they get over the VWAP, you could start looking at this thing and get like a starter position, then the first dip to an EMA, you could get your second position, and then you sell off into the resistance, and then you let the chasers come in and try to buy like this kind of breakout or whatever. Y'all know who you are. I'm one of them people too. I'm not just an owner. I'm also a client. Chasing is an art form. There's 3 stages of chasers. Stage 1 is just like I buy everything a little bit too high and I kind of sell the first dip to support. And I do that on a stock and I'm feeling really guilty about myself. And, I'm like, man, I'm such a beta cuck. And I just go sit on my couch and I sulk because I did it. Stage 2 of the chaser, which is like really Ganar. Ganar is like, okay, I chased it and then I sold it on support and then it went back up and I chased it again after I sold it on support, right? And you do it twice. And now that's like stage 2 of a chaser, which is a very, very special chaser. There's only a handful, I would say out of 75% of traders are chasers. And then out of those 75%, probably over half are just stage 1 chasers where they go in and they're one shot, they chase, and they're like, oh my God, breakouts don't work. The market is choppy, right? And it's like, dude, the market went up like every second of the whole day. But you get that, right? I get some of my students, I'm like, hey man, what the fuck happened on these trades? Guys, Kunal, the market's so choppy, isn't it? It's just like, this is like maybe one of those tough times of the year to trade. Market's choppy? You're choppy, right? So that's stage 1. You buy high and then you sell low because you're not understanding the underlying strategic nature of what's happening on the stock in the different levels, that on a day 4, day 5, day 6 of a move, you cannot hit strength, right? That's the enduring part of what is happening on the daily chart. Day 1, day 2, you can buy this thing up here and try the breakout. Day 1, day 2, you can do that. Day 3, day 4, day 5, day 6, you got to hit them on big dips. Now, stage 2 of the chasers, okay, you sold it on support, you bought it again, and then it starts to go down, and because you took the loss on the first one, you're like, oh, shit, I can't do that. And so you sell it back on support again, and you're like, oh my God, I did it again. And so now you're in this thing. You took 2 small losses, but 2 small losses add up to a real loss. So now you're stage 2, you're just like, fuck this, man. I got to get myself a winner. I got to get my money back. So now you're going to be looking at some other stocks you can chase. That's like next level Ganar. Then you got the stage 3 chaser who's just like, fuck it. They go round 3, they chase again. But at this time, they're saying, man, I'm not using any stops. If this stock dips, I'm in it to win it because I ain't selling on support no more. I'm in it to win it. This stock's not shaking me out. And then, inevitably that's the top and the stock just starts to go down. And now instead of having a couple small losses, you've got one monster loss. But you're going down with the ship. You're like, I ain't selling that thing. No. It'll go back up. That's stage 3 chaser. That's really 5% of the chasing population. That's a very, very special chaser. Everybody is a stage 3 at some point in their career, but, not always. Most people are like kind of stage 1, stage 2, or a hybrid of that. Now let's talk about JNUG here. JNUG had an inside day, a rest day. It was up 7% yesterday. It's got pretty good range. If this 9 EMA tightens up a little bit more, you may start to break back down these lows. As that market starts to gear towards breakout, watch this JNUG. It could start to roll back over again. The snake is loose. OSTK showing a rounding pattern. Now, this stock is a gigantic turd. We all know that. We feel that. It's laid one on our feet, and there's nothing worse than somebody laying a blumpkin on your left toe while you're going into a meeting. That's what OSTK can do sometimes, but you have a rounding bottom that's going on over here. So the volume has died down, but you're not seeing signs of distribution anymore, which is good. You've got yourself a level that's starting to build over here in terms of like kind of a base that, it could come out of. You're starting to see like some different stuff coming in here. And then it's got some airspace if it goes in, Timmy. So I do think we do put it on the watch list. It had a really nice push on it. One thing with OSTK, guys, this is the thing about the snake. We call OSTK in the chat room the snake, laying the snake. Frankly, you can say lay the snake for anything. So it's like, you make a hot trade on OSTK, you say I laid the snake on it. And if you lost on OSTK, you'd say, man, I laid the snake on it. And if you drop like a sick diss track against your neighbor, you'd say, man, I laid the snake on it. So you can use laid the snake on pretty much anything. You're talking to your girlfriend, say, man, I'm ready to lay the snake. You can say lay the snake to anything, but in particular for stock, it's only for OSTK. When you make a good trade on it, you lay the snake on it. This thing is awesome. But OSTK is very, very tough to hit up high. So OSTK, like if you're hitting this thing on strength, it doesn't work that well. So you've got to be like really mindful of like not chasing it at the open. I've done this a million times on this stock and any other stock because I am stage 1/stage 1.5 chaser. So like a lot of times it'll open up and you're like, oh my gosh, it's starting to break the high from the previous day. And it'll come up and boom, like it just comes back down. You had like 2,000 shares this thing because it's pretty cheap. Next thing you know, you're down 50 cents, you lost $1,000 and you're like, whoa, what just happened? What just happened with my life? I should be married with children right now, not laying the snake on overstock.com. Got to be careful. But what'll happen is like once these things once it shakes out a little bit and it remounts over the VWAP and starts to build, that's when OSTK really shines and you can get runs on it. Anytime you chase the stock, man, it's happened to me like 5-6 times. You know what? When it was really ramping over here, I got rewarded by chasing it a couple times on breakouts. Not even chasing it. I had good entries, but they were just breakouts. And they just laid it down on me. And I'm like, oh. And because I like usually trading $40, $50, $60, $70 stocks, like these things, like when you lose like 5%, like, you really kind of, you're really feeling the pain on it. So don't chase this thing. If this thing kind of flushes out today and it starts to base out and remounts, kind of how I like to do it, like you add, say, 1,000 shares and then let it pop up. Like if it dips back to the 9, you add another 1,000 shares. And now you can start building yourself into a big position or into a bigger trade. You don't always have to just be, if you go in, like say you've got X amount of money in your account, and this happens, it's worse with smaller cap stocks. You have X amount of money in your account, and you just, boom, you see it, and you're like, bam, I'm in this thing. The first dip or the first correction, you're going to just sell it, right? You're going to be a little bit skittish, you're going to sell it. At the open, there's not that much liquidity, so what ends up happening is you end up selling it, but you don't get a good fill. So I'm watching this one. I like it, but only on weakness. Otherwise, it's not going to trade well. This VIPS is nice. This looks like a swing trade to me, guys. At this point, if the market starts to break out to highs, so I don't like swing trading when the market's under the 50 SMA and the QQQs. If the market starts to break out the highs and the first dip holds, that's a good time for people like me who are not full-time swing traders, but day traders who like to hold a few positions overnight, that's when you want to start, personally, start to looking at holding some stocks overnight for some swings. This VIPS is nice. You got, kind of a triple tapper breakout here. You broke out, you pulled back to support, you've remounted some MAs here, you're coming into the trend line resistance. It's a China stock. A lot of China stocks are showing bottoming patterns. See, a lot of China stocks are showing bottoming patterns, mostly due to, the trade war stuff has been in the cards for a couple years. Most of these things have been decimated. If you go from $300 to $100, at some point you're going to start to base out. It just takes like one piece of news, one piece of something to get these bad boys going. And like you can see, even like Baidu's got room to 135. So VIPS is something. It's a little bit more cheap, a little bit more liquid. Trades a little bit better. That's, this one looks really, really good. This LVGO is also a rounding pattern. So you got this big dump. Now you popped up, you made a higher low. This is what we'd call like a base breakout. So when you see this, like see how it looks like a W here? When you see that, and same thing with tops. When you see how like it looks like a W here, this is essentially what we call 1, 2, 3 patterns. You got a W here. Once you come out of this base here, you've got room up to like 26 on this bad boy. You got room to go on this thing. So I do like this thing. You gotta let this thing roll if you see it. Issue on this one's gonna be liquidity. How much liquidity do we have? 700,000 shares is not enough, but it gets close to 1 million. I'm ready to pounce on this bad boy. Roku, you can see this one's already dipping down. Watch these things, like draw your levels on this thing, understand where the supports are, and if you can't, like if you're having trouble eyeballing support, use the Fibonacci's or whatever, Fibonacci's or pivots or whatever, get a second eye on things. That can definitely help too. So you always got multiple ways you can look at a potential stock when you're rolling with these things. You already seen this thing flush off a little, so keep an eye on this one. I think if it dropped like $5-6 in a day, it's gonna get picked up. It's just got that kind of momentum right now. If it drops $5-6, I think you're gonna get a nice pickup on this thing. Maybe 130. Cool. All right, that's pretty much it. So let's just review so that we have a focus list. When you are trading, guys, you want to tier your stocks. So you may watch 20 names, but it's not really possible to really focus on 20 names, know all the different levels, and then be able to handle, the data, right? To be able to handle all the data. I got 4 monitors, and I've been staring at this stuff for, a couple hours this morning. So, I've got already a idea of what's happening down. You got to know your levels and know exactly what patterns you're going to trade. Remember, at the open, what do? We trade ORB patterns. We trade quick pullback patterns. Those are the 2 patterns that we like to trade at the open. If you're not familiar with those patterns, check the YouTube videos. I've got 1 million of videos on those 2 patterns that we do at the open during this season. So top plays, we got CRON, TXT for short, IBM for short, but only on a pop, right? Because it's going to be thick. UNP, take that shit off. Then we got Jaina, Rita, OSTK, VIPS, LVGO. And then don't forget the Netflix is going to be in play today too. Netflix is thick. If you're a newer trader, Netflix is going to be hard to trade. Why? 426 million share flow. That means the algos are going to be all up in this grill on this thing, okay? If you got a 30, 40 million share float and you're say $30, $40 stock, the odds of algos even being in it, it's not going to have the liquidity for algos, HFTs to be in it. This thing does 20 million shares a day in volume. It's 426 million share float. This thing is going to be algo city today. You got to ride with the algos, right? Figure on, watch the tape, look at the patterns. They use the same patterns and moving averages as we do. Watch and see when they turn on the jets. When they turn on the jets, you'll start to see those bigger candles. That's when you're going to pop in, but you don't want to chase the candle down. So be good today, guys. Let's do what we do. Guys, as always, if you're having fun watching these things, give me a thumbs up on the YouTube. I do these 2 days a week. I make videos every day, and I will see everybody on Tuesday. We got webinar on Monday at 8 p.m. YouTube live. Tuesday, boot camp class Sunday, so we got a full slate of stuff going on. All right, let's go have some fun. Let's make some money. Let's do this. And guys, remember, you can always email me. Email me if you have any questions. I love chatting with people. Like, I encourage you to do it. Let's roll, people!